G'day everyone, welcome back to Pete's Investing. Today is June 29, 2023. This is the spot gold price analysis. On our weekly, daily and hourly, we're in a bearish momentum, so only short trades to be taken. So let's look at each of these. You can see here on our weekly timeline, the triple moving average of the price chart, the CCI moving average and our oscillator are all turning down, giving us this bearish signal. On the daily likewise, a bearish signal. Notice it's actually penetrated through this, what was a key support 1910 area. So we may have to remove that at the moment. I'll just leave it there for the moment to see what happens in the next couple of days. It may actually break up from there, but we'll keep it there for the moment. Otherwise, we're going to have to move it down to that level down there. But at the moment, it's punched through there in the last 24 hours, and you can see that bear candle is still pumping away to the downside. That's on the daily. And that's actually penetrated the 61% Fibonacci level as well, which is a key area to look out for. So looking bearish at the moment for gold. On the hourly, if I zoom out, you can see there we had a bullish divergence on the CCI versus a bearish divergence on the price chart, and that was down to that support level, as I said. Now it's punched through that support and prices made lower lows. So I'm going to remove this Fibonacci and that target range. Now remember the rules. You would not have entered long yet. You would have waited until the price breaks above this channel, and to draw the channel, let me first of all extend that to where we are today, and I'm going to keep that along those highs you can see there. So that's the top layer of the channel, but basically the price needs to break above that trend line before entering, as long as this CCI keeps moving to the upside. Now it's been fluctuating up and down, but you can notice there if I zoom out on that, you'll notice it's a pretty obvious bullish momentum on the CCI. So we're still quietly positive about this, moving to the upside. So again, no harm done. You would not have entered it by now. You'll only enter it once it breaks above this top trend line. And what we're looking at doing is let's set some new target areas, assuming it starts turning tomorrow. Of course, it may make lower lows. Let's say so we take it from that current low, bring it up to that recent high. So again, let's assuming it breaks up in the next few days, and it breaks above the channel, let's say around somewhere there. Then we need to set a target, and our target area would be the closest Fibonacci range, and that will be between the 38% to the 50%. And again, I always like hitting that 38% level at the moment. That's the closest range. So the target there would be 1971. Now, of course, if it breaks above this channel, this trend line, that's your entry point, and that'll be my closest target. It could go higher, of course, but again, to improve your probability of success, I prefer to take the closest Fibonacci entry point. So that's where we are on that one. Also, as I said, if I zoom out, we've got a bearish backtest and a bullish backtest. You can see there we average down. We don't use stop losses. We only enter those trades when the weekly and the daily and the hourly are aligned. So you'll notice the weekly, daily are short. The hourly is also short, so you would be entering short trades from here. So again, there's no sign of any support below this at the moment, apart from that bullish divergence we mentioned. So that's how we trade that. So to understand how to trade that and other trading strategies, subscribe to my Patreon page, where we also look at weekly scans of stocks, currencies and commodities. Subscribe, like and share the channel. Thanks for watching, and see you in a future video.